6 months ago, I took $50, not 500, not 5,000, $50, and put into the stock market. No trading course, no secret tips, just $50 and phone. And what happened next actually surprised me. So stick around, because by the end of this, you'll know exactly what I'd do differently if I started today. Back in January 2026, the S&P 500 was sitting around 6,800 points. And everyone online was either saying the market's about to crash or that AI stocks are the future. And I was tired of just listening. I wanted to actually test myself with money I could afford to lose completely. So I opened a fractional shares account, the kind where you don't need $200 to buy one share Apple. You can literally buy a slice of stock for $1, and I split my $50 three ways. $10 into the S&P 500 index fund, the boring. Everyone recommends a choice, basically betting on the entire U.S. economy at once. $20 into NVIDIA, because everyone and their mom talks about NVIDIA, but I wanted skin in the game, and $20 into a stock I'd barely heard of, SanDisk, picked almost as a joke because it makes memory chips for data centers, and I did not expect what came next. By month 2, the overall market had climbed, and as of right now, the S&P 500 is up almost 10% year-to-date, which by historical standards is a genuinely strong 6 months. My index fund slice moved right along with it. Solid and steady in the best way. NVIDIA barely moved, up only about 5% for the whole year, even though it's still the most valuable company on earth. But SanDisk, the one I picked almost randomly, has been one of the single best performing stocks in the entire S&P 500 this year. Gains in the hundreds of percent, driven by insane demand for memory chips used in AI data centers. And my $20 in it alone would now be worth several times its original value. But I want to be honest, that is not normal. That is not what happens with $50 most of the time. I got lucky on timing and sector, and you need to understand that before you dump your rent money into some random chip stock. Here's what actually surprised me the most, though. It wasn't the winner. It was a loser. I almost put money into a 4 stock, a software company that looked safe and established. I didn't at the last second, and good thing too, because that exact type of stock has been down. Over 50% this year, while chip and hardware companies boomed. And the lesson is the market right now is being carried almost entirely by AI infrastructure, chips, storage, data centers, and companies that don't touch that trend have been getting left behind, even huge familiar names. Meanwhile, the Fed has held interest rates steady around 3.5 to 3.75% for months, which means borrowing is still expensive. But stocks tied to AI spending haven't cared one bit. If I started this experiment again today, honestly, I wouldn't change the index fund pick. That's still the safest long-term bet for anyone starting with small money. But I would spend less time trying to guess the next SanDisk and more time understanding why a stock is moving before I buy it. Not just picking a name because it sounds cool, because $50 isn't going to make you rich, but it will teach you more about how markets actually behave than any course I could have paid for. So if you want, I'll do a part 2 where I put in another $50, but this time using an actual strategy instead of vibes. Let me know in the comments what I should invest in next. And if this helped you understand the market a little better, hit subscribe, because I'm doing this every month from here on out.